Good afternoon, you're watching Market Sense. I'm George Cherian.
Very good afternoon to all our viewers. I'm Tanveer Gill. Just take a look at the markets and we are looking at the index circling around the 5900 mark. Not much has changed for today's session, but what is important is how we've shaped up for the year, because that's the clear talking point. Even if we close around 5900, one is expecting to start off 2013 on a rather promising note, with positions on the futures and options side indicating build up around the 6,000 mark. That would be an important level to break, but for the market right now, we're pretty much range bound with 5,900, within that range of actually 5,850 to 5,900. If we take a look at individual movers in the market, you have the entire banking lot, which is looking strong. Punjab National Bank up about 3%, Bank of Baroda holding up. From some of the commodity names, you have Jindal Steel and Power and Hindalco doing their bit. On the losing side, so the IT names continue to reel under pressure.
All right, let's just quickly cut across. Okay, that's the HDFC Bank management, Paresh Sukthankar, Executive Director of the bank, who will be addressing the media in minutes from now on the bank's decision to lower its base rate. But we'll get you details as and when he starts speaking. But for now, let's very quickly focus on some of the on the currency markets and the fixed income markets. The currency is under a slight amount of pressure in trades today, simply because of month-end dollar buying by oil marketing companies, and that's pressured the rupee only very marginally. So roughly 54.78.79 is where the rupee is trading at. Okay, so let's quickly then cut across to HDFC Bank addressing the media on the base rate cut.
Reduced by 10 basis points from 9.8% to 9.7%. As you're aware, the base rate calculation is required to be reviewed every quarter. So our ALCO reviewed this for this quarter last week, and factoring in the slight reduction in fixed deposit rates as well as the CRR reduction we had seen earlier in the quarter, on a cumulative basis, the calculation has thrown up the base rate reducing to 9.7%, and that's what the base rate will be effective today. We'll be happy to give any clarifications or answer any questions that you might have.
So how much is the cost of funds basically moved if we compare with quarter and quarter, because quarter is ending today?
Sure.
So quarter and quarter, how much reduction have you seen in the cost of funds?
See, the base rate calculation is not based on an overall cost of funds calculation. It covers a couple of fixed deposit tenors which are specifically included in the calculation. It also includes the grossing up of the cost of our deposits by the CRR and SLR, and there's a small influence of the policy rates as well. So our overall reduction in interest rates and our overall reduction in cost of funds would be something which would happen gradually over a period of time, because it's not only for those tenors but across several tenors.
अभी हमारे कि आपने कोई एंटिसिपेशन नहीं रखा है कि आगे रेट कट होंगे, उसके लिए आप पहले से तैयारी नहीं कर रहे हो, जब भी रेट कट्स होंगे आप फिर उसको पास ऑन करेंगे?
हाँ, because जो कैलकुलेशन होता है उसका it's not something which gives you a chance to do something proactively, because there are specific rates which we include in the calculation, and the whole idea of transmission is कि जैसे जैसे rates change होते हैं deposit rates, या तो फिर CRR या SLR में कुछ बदलाव आता है, तो the impact of that gets translated into the rates on the base side.
So we can understand that we are moving now towards a softer interest rate scenario, because RBI also in its October policy had given a guidance that looking forward, if we
Sure.
see the inflation numbers sliding down, then we could move towards a more softer interest rate scenario. Are we seeing that situation coming in?
Yeah, I think the general anticipation is that there will be a reduction in policy rates in the Jan to March quarter, whether it happens in two tranches of 25 or otherwise. I think most participants in the market, most banks believe that there will be a 50 basis points reduction in policy rates in that quarter. But that by itself, is not enough, because ultimately the major impact on base rates for almost every bank will be the deposit costs which are included in that calculation. So in conjunction with what happens to policy rates, depending on what's the liquidity situation, I guess banks would react in terms of reducing their deposit rates, and it's only when the deposit rates are reduced, then that plus the policy rate changes will translate into further rate reductions on the lending side. So I think it's a combination of the liquidity scenario. As you're aware, right now the total borrowings under LAF are almost 1,40,000, I would be surprised if banks feel comfortable dropping deposit rates if the borrowings are as high as that. So if by that time you do have a reduction in the LAF borrowings, perhaps somewhere closer to 60-70,000 crores, then perhaps banks may be comfortable dropping deposit rates, taking a cue from the policy rate changes, and then that in turn should help essentially sort of the trend of declining interest rates.
So after the base rate cut, do we also see some following it by the deposit rate cut even in the selected tenures?
Not right now. I think you have seen the last few months some reduction in deposit rates, especially for, if you look at the 1-year rates, for instance, they were well above 9%. Now they're about 8.75. But at this point of time, I don't see a further reduction in deposit rates. As I said, till the liquidity scenario, in terms of the overall banking system, liquidity scenario is a little more comfortable. As you know, again, if you look at the last deposit growth rate numbers which have come out, they have dropped pretty sharply. So, in such a scenario, I'm not sure banks will be comfortable dropping deposit rates any further.
So what kind of credit growth have you seen in the past quarter? So, and I mean, is it more a factor of you requiring to bring down rates to push credit growth that we're seeing this kind of factor?
Not really. As you can imagine, I'm not going to be able to talk to you about any numbers. It's just a couple of weeks down the line that we can declare our results and we can talk about that. But as I said, in the whole transmission mechanism, which is now a part of the base rate calculation, really leaves very little flexibility, or just as you can't be proactive, you can't be reactive, you sort of do that in that very quarter. So as far as our loan growth is concerned, I mean, has the reduction in rate been necessitated by that? I don't quite think so. It's just a reflection of the slightly lower overall cost of funds, including, as I said, the cost of maintaining reserves, and that essentially being passed on as per the calculation that the bank has in place.
So most banks right now are still waiting for the RBI policy, and then probably they'll take a call on cutting the rates. But what's the rationale behind cutting it right now, before the policy also, and post the policy? Is it, can we say that HDFC Bank will not be taking a call on any, rate in case RBI cuts the repo rate?
No, I think I'll be sort of in some ways reiterating it. Every quarter we do review the base rate calculation. So in fact, we had first dropped our base rate from 10 to 9.8 in the first quarter of the year. That was based on whatever reductions we had seen at that point of time in both reserves and the deposit rates. In the second quarter, which was the September quarter, we had reviewed the calculation and nothing had changed. And now, based on whatever has happened so far, in terms of deposit rates reductions, as well as the marginal 25 basis points reduction that we saw in October end, I think, in CRR, this calculation is done. So it's not trying to say that, because if there is any further change in policy rates or reserve requirements or deposit rates, whenever we review this in the next quarter, that will come through in the calculation. So, it does not mean that, we would not do it or we would do this in anticipation. Again, whatever the numbers come out in the quarter ended March, in the next quarter, we would review that at that point of time.
So what would be the impact on NIMs?
At this point of time, I'm not going to be commenting on the P&L impact. I'll be happy to take those questions, when we sort of declare our quarterly results. As you can imagine, in any case, this is effective 31st of December, so certainly it could not have impacted the NIMs for the quarter that has ended. Going forward, I'll be happy to sort of clarify this, with our quarterly results.
So just one clarification.
Can you give us some outlook on the credit growth? Because from April to December, we have seen non-food credit growth of little under 5%. So can you give us some outlook for the calendar year 2013? What is the credit growth that HDFC Bank is expecting?
Well, I can just say that on a year-on-year basis, we still believe that for the full year, the banking system growth will probably still be somewhere in that 15.5% to 16.5% sort of range. Again, that's based on certain assumptions in terms of what we ultimately see as GDP growth. And, we have traditionally said that we would grow a little faster than that. I think that basic outlook remains unchanged.
Alright, that's Paresh Sukthankar of HDFC Bank talking about the bank's decision to lower the base rate by 10 basis points from 9.8 to 9.7%. Also saying that it really was the CRR cut, the recent CRR cut which happened on the 31st of October, that actually enabled the bank to lower the to lower the base rate, and that any base rate cuts going forward, like they've been saying in the past, will be driven entirely by their cost of funds position. So going forward, you can expect rates to lower, as is widely expected of the entire banking sector, but it clearly is going to be the the market leaders such as HDFC Bank and ICICI Bank, State Bank of India and the like that will drive the rate cuts, and you will see the other banks being forced to follow suit. So for now, let's shift focus away from HDFC Bank. The stock as we speak is down about 0.2%. Let's take it across to our colleague from Delhi, Sumit Chaturvedi, who has information on KFA officials having met the DGCA over the weekend to discuss the carrier's revival plan. The airline's license, in fact, expires today. Sumit,